Tesla just delivered one of its strongest weeks in recent memory. Closing on Friday at almost $285 per share, the stock posted a jaw-dropping 24% gain over the past 5 trading days. For Tesla investors, both long-term believers and cautious skeptics, this week felt different. It felt like momentum finally shifting after months of steady pressure and doubt. But the big question is, what's fueling this rally? And perhaps even more importantly, is it sustainable? Let's unpack it. The first and arguably most important catalyst was Elon Musk's personal move. Musk announced this week that he is stepping back from his heavy involvement in the Department of Government Efficiency, a side project that had been raising eyebrows among Tesla shareholders. By publicly recommitting his focus to Tesla, Musk is sending a signal to the market, he's all in once again. And historically, Musk's most direct periods of leadership have coincided with Tesla's greatest leaps forward, whether it was scaling up Model 3 production during the so-called production hell or launching disruptive technologies like autopilot and Tesla Energy. When Musk is focused, Tesla moves faster. And that renewed leadership energy is exactly what rattled bears and energized bulls this week. Second, there's a major regulatory tailwind developing. The U.S. Department of Transportation introduced a new automated vehicle framework, loosening restrictions and setting a clearer pathway for self-driving vehicle adoption. This isn't just another piece of bureaucratic news. This could be transformational for Tesla's full self-driving program. Until now, one of the major risks facing Tesla's autonomy ambitions wasn't just technical capability, it was regulation. No matter how good the system became, regulatory bottlenecks could delay mass rollout for years. But with the government signaling openness to faster approval processes and updated safety standards, Tesla now has a much clearer runway to scale full self-driving beyond early adopters. If Tesla can monetize autonomy at scale, it would unlock massive new revenue streams, from robotaxis to licensing deals, and fundamentally change the company's long-term valuation model. Third, we have to talk about the earnings reaction, and why it surprised almost everyone. Tesla's Q1 earnings, at first glance, looked ugly. Automotive revenue was down 20%. Adjusted earnings were down 40%. Margins were squeezed by ongoing price cuts across their lineup, especially in markets like China where competition is fierce. Yet despite these ugly numbers, the market didn't panic. In fact, it rallied. That tells us something critical. Investors are no longer viewing Tesla purely through the lens of quarter-to-quarter automotive performance. They're buying into the larger vision. Today, Tesla is increasingly seen as a multidimensional company, a blend of electric vehicles, artificial intelligence, energy storage, robotics, and software. The potential value of Tesla's AI and robotics division alone, if successfully executed, could eventually rival the traditional car business. And that shift in investor mindset is what allowed Tesla to brush off weak earnings and power through with one of its biggest weekly gains ever. Now, to stay balanced, it's important to remember that challenges remain. Price wars in the EV space are still pressuring margins. Tesla faces tough competition from BYD, Rivian, Lucid, and traditional automakers racing to electrify their fleets. Delivering on full self-driving is still an extremely difficult technical and regulatory challenge. No one should underestimate how hard Level 4 autonomy really is. And while Musk's renewed focus is a positive, investor patience won't be infinite. They'll want to see real execution, especially in scaling production of the next generation of vehicles like the Cybertruck and the robotaxi platform. That said, compared to where Tesla was just a few weeks ago, battered by bearish headlines, weighed down by skepticism, and underperforming the broader market, this week feels like a genuine turning point. The fundamentals of the business haven't changed overnight. Tesla still faces headwinds. But what has changed is market sentiment. And in the stock market, sentiment is often the first thing to move, well before fundamentals catch up. In short, Tesla's 24% rally is a strong reminder that in growth stocks, narrative matters. And this week, the narrative around Tesla got a lot more exciting again. Whether this marks the beginning of a longer-term uptrend, or simply a sharp bounce before more volatility, will depend heavily on what happens in the next few months. Specifically, how Tesla executes on autonomy, how Cybertruck deliveries ramp up, and how the broader EV market stabilizes. For now, though, Tesla bulls have something they haven't had in a long time. Real momentum. And the belief, cautious but real, that the best chapters in Tesla's story might still lie ahead. Thanks for tuning in. If you enjoy realistic, grounded stock analysis without the hype, make sure to like, comment, and subscribe. Stay sharp, Stay optimistic, but never blind, and I'll see you next time.